Good morning, it's Kenny Burdine. It's Friday morning. It's about 9:30 on June 26th. So I've just gotten the USDA report, price report for this week. I'm just going to kind of walk through some things and give you some of my impressions of the market right now. I'm going to start by talking about cattle slaughter. And, this to me has been the real story. You can pretty easily go back and look at where we were in late May, and we were down about 35% below a year ago levels in terms of cattle slaughter. And the last 2 weeks, we've been about 2% below. So we really have ramped up cattle slaughter quite a bit, which was really what this market needed. A lot of discussion about box beef price, or the wholesale price of beef, the last few weeks, and how much it spiked up when slaughter was down so much. But you can look from this past week that we're about where we were now a year ago. So things are moving back to somewhat of what might be a normal. The other thing that's going on, ordinarily slaughter weights, harvest weights decrease from spring to summer, but we haven't seen that at all this year. And it's just because we backed cattle up in the system quite a bit, and they're still backed up. So a lot of cattle have been on feed longer because we've been able to move through the system. So that's, I think, been part of the reason why we've seen quite a bit of downward pressure real recently on slaughter cattle prices. So slaughter cattle were up above 115 just a few weeks ago. And last week they were a little over $1. Looks like they're going to be somewhere in the 96, 97 cent range per pound this week, which is lower than I thought they would have gotten a few weeks ago. But I think it's several things: more cattle moving through, basic seasonality, and those higher weights, and it's put some downward pressure, very significant downward pressure on fed cattle price. So we're dealing with this right now, certainly on the fed cattle side. Shifting gears and talking Kentucky for a second, like I said, I just got this week's market summary from USDA. Start with the light blue line. Heavy feeder cattle are down about 5 or 6 cents a pound the last 2 weeks. Now, I'm not reading a whole lot into that. I think some of it may have been quality driven. We bumped up a little bit this past week, but it is something kind of to watch. In general, we've been building momentum in our calf and feeder cattle markets since about the 1st of May. So the last 2 weeks have kind of been an exception to that. Calf market there, the black line's been fairly steady. Calves have roughly been a 550-pound steer, somewhere in the mid-140s. Value-added cattle and groups up in the 150s, but that's about where the market's been. Last chart I'm going to show you before I wrap up. This is our cull-cow price chart. I'm showing you 80 to 85% average dress boning cow. But, you can go back and look at that real spike up that we saw at the end of March, and then how quickly things changed for a couple weeks after that as we had some plant closures. But notice the steady increase from that point on. In fact, the last 2 weeks have been the second and third highest weekly average for these 80 to 85% boning cows since January. The only exception being that last week in March, which looked like a bit of an anomaly at the time, but we're almost back there now. So clearly we're in a very strong ground beef demand market, and the cull-cow market's been responding very nicely. It's a bright spot, and I think it is one potential source of cash flow for some cow-calf operators. Just kind of my thoughts on the rest of 2020. I am concerned about how much the fed cattle market's dropped the last few weeks. I didn't think it would get below $1, but it looks like it's definitely going to this week. But, the good news is we are getting somewhat current. We had a lot of cattle backed up, and, we went a long time with very low slaughter levels. So we just got to work through it. So that is the good news that's out there. Generally speaking, what heavy feeder cattle tend to do seasonally is they put their price in sometime, think end of August, early September, and then move down from there. I actually think, though, that they've got a pretty good chance of holding very well this fall. And I think stocker operators who are selling heavy feeder cattle this fall will probably do reasonably well, especially those that are able to place calves at a pretty good time back in, say, late March or most any time in April, when most of those calves were placed. So all about placement time. I think a lot of our stock operators will do reasonably well. I'm less optimistic about the calf market. Just in general, the headwinds for calf price in the fall are much stronger. Look at where we are now, and then where kind of the spring 2021 feeder cattle futures is, and thinking about what the fall market might look like. If I was looking at a planning price for steer calves this fall, I would put a 550 pound steer calf state average somewhere kind of in the $1.30 to $1.35 range. So about a dime lower than he is right now. Certainly value added and groups will be about a dime or 15 cents above that. But if I'm right and prices are about where they were last year, that means most of our cow-calf operators are probably going to cover their cash costs, but see little to no return to land, labor, or capital. So going to be another tough fall, I think, for a spring calving cow-calf operation. By all means, if you have questions, reach out. I'm glad to visit with you. I'm real easy to catch by email, kburdine@uky.edu. Office number 859-257-7273. I'm kind of at the office some and at home some right now. But, leave a message there and I'll certainly get back to you regardless. And continue to follow me on Twitter @KYCattleEcon. Wish you the very best.